Hey everybody, it's Wednesday, March 17th, 2021. Just wanted to bring you some quick economic news today, and in this case, more on the stimulus checks. Now, while a lot of people haven't gotten their most recent round of checks, which is the third round of stimulus checks, there's now talk of a fourth round of stimulus checks, and we knew this was going to happen. We knew the checks were going to have to come out more frequently. Why? Because there's not really an economic recovery. While the unemployment rate is dropping, when you look at the number, the real situation is more people are out of the labor force long term, therefore not counted as unemployed. So you're going to have to see more stimulus checks go out. Otherwise, this debt bomb begins to pretty much blow up and the system begins to collapse. And not only is there talk of a fourth stimulus check, well, there's more talks now of what sounds like universal basic income. So let's take a look here, and I want you to listen to the language that's being reported here. And this is a Go Banking Rates article via Yahoo Finance. And before we start here, I just want to say a lot of people still haven't gotten their third round of stimulus checks, and we're already seeing articles like this talking about a fourth stimulus check. From this article, according to Politico, some members of Congress do not feel that a third stimulus check is enough. 2 months before the new relief package was signed, multiple members of the House signed a letter asking the president to prioritize reoccurring direct checks instead of one-time stimulus payments. Let me repeat that. Prioritize reoccurring direct checks instead of one-time stimulus. Reoccurring, that sounds like universal basic income. We said this was going to be implemented eventually, and it sounds like we're headed in that direction even faster than a lot of us here thought. And this is not a small number. This is 50 members of the House. And in this letter that was published from these lawmakers, it was published in Politico, says the following, quote, another one-time round of checks would provide a temporary lifeline, but when that money runs out, families will once again struggle to pay for basic necessities. And the next quote, listen to this one here. This is even more revealing. This is out of one of the members, one of the lawmakers. Quote, a one-time payment of $2,000, and this is back when they talked about $2,000 stimulus, is simply not enough. American people are counting on us to deliver transformative change, and we need to meet the moment by delivering monthly payments of $2,000, right? So we have lawmakers now, elected officials, that are pushing for $2,000 a month continuous stimulus checks. In this case, let's just call it what it is. It's universal basic income. All right, so wait a minute. Let's analyze this for a minute. So one-time stimulus checks, a second round, a third round, a fourth round is not going to be enough. Why are they saying that if we're in an economic recovery? Do you get what I'm saying here? Right, so the narrative has been that there's an economic recovery because things are reopening, people are going back to work, jobs are coming back, which when you look at the real numbers is not true. But even if they believed that to be true, even if they were fooled somehow and thought it was true that we're in a recovery, why would they then advocate for more frequent stimulus payments? So basically, I think they're admitting that they know that the economy is broken and it can't be fixed. Technically, it could be fixed if they would just let free markets operate, but we know they're not going to let that happen. You see, when you provide endless liquidity for the banking system, prices are going to continue to rise. All right, let's go back to 2008 again when the housing bubble finally imploded. It imploded because banks quit lending. We had the Lehman Brothers situation, a lot of panic within the banking system. Banks didn't have to stop lending. Remember, they had an unlimited printing press back then. They just chose not to use it. Now, some would argue that they couldn't get together quickly enough and pass the required legislation to liquefy the banks before home prices came crashing down. But technically, they could have it with a stroke of a pen. And we know that basically any law can be overridden now with the stroke of a pen from a certain person. But this time, and we've reported on this over the past few years, the Fed got out in front of the situation. right? The repo crisis, they injected liquidity as needed. They let the banks loan out money that's not in their reserves, endless amounts of money. And therefore, the lending kept going, and we still see home prices rising. We still see banks giving out money, not to everyone, but it's definitely not what it was in 2008 when banks pulled back from lending. Right? For those of you that tried to get a mortgage back then, you might remember it was a little bit more difficult and a lot more difficult for some people. And for a very short while, you had to have superior credit and a big down payment. It's not like that now. Also, back then, before the big housing bubble blow up, what was the Fed doing? They were raising interest rates and aggressively. This time it's been a consistent lowering of the interest rates, just the opposite of what happened and what blew up the housing bubble back then. Now we have the lowest down payment loans, FHA loans, and we have now twice as many of those this year as we did just 1 year ago, because the government sponsored entities are stepping in more heavy-handed now to support the housing market. Right now, if they would have did that back in 2008, you might not have witnessed the housing bubble come undone like it did. Right? So this time they're more active, they're out in front of it, and they're trying to prevent this from dropping. All right, but my point is, if the cost of living is still going to continue to rise, rents rising, home prices rising, food prices rising, insurance, fuel, energy, right? Utility bills are not dropping in most areas. The cost of living is rising. And many would argue that the more stimulus checks you send out, the more people are going to go spend, and it's going to cause more rising prices. All right. So here's the big secret that you're not supposed to know. When people don't have money, most people, when a big portion of the population is living paycheck to paycheck, you're supposed to see prices drop. Prices are supposed to correct to match the money that people have to spend. And now people have money to spend without having a job in many cases when you look at the stimulus checks and other support that's pumped out there, enabled by the endless printing press. You're going to see just a backwards, dysfunctional, make no sense economy. So you're going to see rising prices, even though there's record numbers of people now out of the labor force and not working. All right, so let me know what you think about this language, everybody. Looks like we're headed towards universal basic income much quicker than most of us thought. Or will the money printers pull back and let this whole system collapse? Maybe that's the solution, since no other plans or no other transformations of this economy and how it works are being discussed. So maybe UBI is the only other alternative. You guys let me know. Thanks for watching this report. Stay well, everybody. Stay safe, stay prepared. Bye for now. Peace.